This is the seasonal stock and ETF reports for today, last day of September 30th. All right, let's go take a look at actually CNBC first. Markets are so oversold right now. We're rising slightly. Let's go back and take a look at S&P 500 today. We're going to see what kind of seasonality are we going to see. I'm going to go to indices common. GSPC. By the way, that GSPC is going to be changed to SPX soon. That's coming out. So this is S&P 500. Take a look. Last 10 years, we're showing that right here. We are going down until October 10th and then sideways. The real magical day is about here. That's when things turn bullish if everything is intact, if there are no crashes or anything that's happening. We don't predict crashes here. We just look for historical seasonality, and historical seasonality tells us basically when there are the seasonal forces, what direction are the seasonal forces. There could be other forces. For example, a crash could overwhelm seasonality and go against it. But if it holds, and right now market is extremely oversold, unfortunately means two things. Either we're ready to go for a bounce in next couple of weeks, or this is because markets also crash when they're oversold. It could go either way, but I would say that for the first 2 weeks of October now to the next two weeks of October, seasonal forces are down. So I wouldn't go for a long trade or even for a long-term investment selection yet. You should be waiting. Let's take a look at what does it look like for last 10 years. We see a balance of 5 and 5. With an average profit of 2.55. We can also see that the average loss was about the same, 2.64. It doesn't reveal anything at this point, except one thing. You should not be in stocks yet. So that's what we get out of the seasonality of S&P 500 for this one. Let's look at what happened last 20 years. As you can see, it's still on a downward path right there. The 2008 crash, which was 23%, was during this period, which is somewhere between today and October 10th. Let's go and take a look at last 40 years. Last 40 years also includes 1987, but as you see, this is only a moderate drop in 1987 for this particular drop, but 2008 shows a 23% drop during this date range. Let's go for all the data. 94 years. 94 years, we actually see a slight bit of bullishness, but again, this is definitely not the time to be in the markets yet. Now, let's take a look at VIX. So, this is the last 10 years of VIX. We only have 31 years of VIX data. Let's look at all of them. VIX right now, right here. This is where we are, the left edge of the opportunities table. We are on a seasonally bullish period for VIX. What does that look like? For next 13 days. Actually, it shows bearish, except that the reason it looks upwards, when it was going up much stronger than when it was going down during this period. That's why it shows an upslope. But the real peak, there's a peak here, there's a peak there. That is October 30th. Markets tend to drop. The VIX, volatility tends to drop after October 30th into November. So if everything holds up, this is when we want to buy stocks about this time and ride the VIX is going to be going down, which is bullish for stocks. Let's see, how about Nasdaq? Nasdaq is also on a small down path before it is going up. See that? Very large down are in play. Okay, let's take a look at so what did we learn? We learned it's not time to be in the market yet. The magic date, after looking at a lot of seasonality, the magical date for bullish period is October 25. Actually, the best period we found is October 25 until January 6th, which I'm sure we'll be talking about it. Okay, let's take a look at IBM. IBM opportunity is getting close for an entry. The Sharpe ratio is rising, so we want to trade this when the time comes, and I think the best time is about here. It is from October 10th until October 25, an average of almost 8% drop last 10 years. If you look at last 15 years of IBM, during this date range, Sharpe ratio is 1.31. That is a very good Sharpe ratio for this drop. We are profitable 87%, 13 out of 15 years. 2017 it didn't work, and 2010 was pretty much flat. All the rest of the years, IBM dropped like a rock. And then bullish period starts right around here. That magical date of October 25th also applies to IBM long. Walmart, it's there. Microsoft on the list. United Healthcare, Visa, these are very long terms opportunities. I wouldn't get in them yet. The time to get in these is after October 25. Here's some short term. Johnson & Johnson, although it has a drop, can we make... Yes, we can make the Sharpe ratio raise by waiting until October 14 and make this 59 days. 1.61. That is a trade that I wouldn't mind taking. However, this is October 14th, not yet. It's too early for this. JP Morgan and Goldman Sachs are also showing bullishness, but look at this. There is a drop. Is it going to get better? No, it's about the same. How about Goldman Sachs? Goldman Sachs looks like it's on an upward path with a decent Sharpe ratio. Walgreens also on a downward path. This is the time to get in. You gotta wait till like the second or third week of October. It's just too early. Everything shows that bullishness, seasonal bullishness starts mid to end of October. We're on a down period right now. 3M. Also, you see, there's this drop right there. How about Disney? Disney is also going down right there. I wouldn't get into any of these yet. But time's coming. Let's go to Nasdaq. Nasdaq, top of the list again is Keurig. However, we took a look at this before. This is the time to buy Keurig. Is October 4th. There. Sharpe ratio 3.3. Average profit 12.77. And that's only from October 4th until January 5th. This is unprecedented. This is a great opportunity. Keurig is definitely one of my favorite opportunities that we've found. Yeah, you can't beat this algorithm. It finds every possible seasonal opportunity and it rates it. And you are looking at the best there has been historically, period. There just has not been a more stronger seasonality in the historical data that's been scanned. These are longs, but we really want some shorts. Let's look at our shorts. Top, AstraZeneca is a short with the Sharpe ratio is almost 1, so it's actually a good. Biogen is also on a downward spiral with a fairly low Sharpe ratio. We cannot improve the Sharpe ratio. Of course. I keep thinking I'm smarter than the algorithm, but I am not. Let's go to Wilshire 5000. We're gonna get, or no, let's start with the S&P 500 first. Let's just take a look at the short opportunities. IBM's on the top. Gilead, Williams, these are all decent short opportunities. Chipotle, but this is low Sharpe ratio. I would prefer a higher Sharpe ratio. Okay, let's take a look at ETFs. Top of the list, consumer staples, followed by dividend appreciation ETF, and XLK, some technology sector ETF. These are pretty decent Sharpe ratios, so these are good long-term opportunities. Okay, I think I'm going really way over today. Let's end it for today and take it up again next month. Next month is an exciting month because there's a lot of seasonally turn in trend will occur next month. Talk to you next month.